Hey everyone, happy Wednesday. We're back. We're back at it. It's September. It's always a busy time. Kids are back to school. Everyone gets back to work. They start looking through their emails. They're back at it, and there's lots to get back to. This is an interesting month, and we're gonna talk about a couple things today and rant about a few things here. Mainly about gold, because since 2017. On average, gold has gone down 3.2% in the month of September. So that's an interesting little factoid. Will it repeat? I don't know. If you're a trader, is there an opportunity here to wait till it goes down 3 or 4%? I mean, the volatility alone, it should, and it becomes a buying opportunity, or what's your strategy here? If you think that this is going to be another year of the same, there's certainly a way to trade it. Or are you more of a long-term investor type, or what's your approach to gold? We'd love to find out. And on that note, we did we had a poll, and the result of our poll showed that 25% of you said you had 0% going into gold of your portfolio. 17% said 2%, 5% said 0%, and 58% said 10%. So a big chunk of you, there's a big gap there. Either a lot of you, little to none, or quite a bit. And that's not really that surprising. I would expect it to be something like that, because once again, gold isn't exciting. It's hard to get too motivated by. I get it. Everyone wants to look at the bigger, brighter, exciting things. And obviously the stuff that it's free PR. It's in the news. Tech. I mean, that stuff. Although it's not as easy to follow. I mean, a lot of people will follow NVIDIA and follow AI and all those stories, but you need to have a very high level of engineering, of technology use, and coding and whatnot to really understand what they're getting at. And gold is certainly not that exciting. It takes a different kind of mindset, and most people don't have the time. That's why they listen to influencers and they watch, BNN and CNBC, and all these shows to get other people's kind of viewpoints and jog their memory and get them excited about things. And certainly, you're rarely going to hear much in any mainstream news about gold, and that's fine, because they're not going to make a ton of money on it. I mean, it's not flashy and it's not exciting, but my premise, and I think most people would agree, that in these times of incredible chaos, you want to find out to see, is your foundation strong? Is it built on anything that can endure and withstand pressure? And that's being questioned. And that's kind of my thesis regarding gold, is that it's not a matter of listening to people and what they say they're doing and not doing. It's what are these major countries, banks and whatnot, why are they buying gold? Why are BRICS nations buying gold? What's the reasoning behind it? And that is just very interesting. And certainly the retail story is stronger in those countries in the East. The West, it's not as strong. People don't follow precious metals as much, but they are. It's starting to get people's attention. So I'd love to see your feedback too, as to, do you think there's going to be a dip in September here? And then what do you think your longer term, horizon is? And on that note, I want to kind of jump into something as well that is always worth talking about too. And it was the Biden administration kind of saying about price floors, or really supporting, in this case, a lithium. And the Biden administration said, if we move forward on anything like this, the intent would be to nudge. That is to set off the flywheel versus create a permanent subsidy or cushion for a particular sector or company going forward. Setting a price floor and agree to pay the difference when the market falls below that threshold would be there to advocate and to act in the best interest of this transition. Now, for me, having a price floor guaranteed by the government, I mean, if you're a pure capitalist, you don't want all that much government intervention into business. You would say, listen, the market will tell you whether or not they believe your story or not. And there is a lot of truth to that. If you have to have someone come in and to try to influence you to support something, then the market's not believing you very, very much. Sorry, excuse me. And that is true, but there's so many factors nowadays that also show that may not be entirely true. China is very well aware of the critical metals race that's going on. So I think that battle is ongoing. And it's something we have to keep in mind too, that it's important. And believe me, this is self-interest as well, because everyone knows I'm into mining. So to hear that there'd be some sort of support for it, hey, listen, I like it. That's a good message for me. So I mean, I don't think anyone would fault me for wanting that to some degree. And I'm not a big fan of government intervention in too many things, except that you do have a situation right now where China is light years ahead of the West entirely. So I mean, that's U.S., Canada, Europe. It's so far ahead. And if you don't have some sort of strategy in order to solve that, then we're in big trouble. And that has nothing to do, once again, I say this a lot, that China is our enemy and it's terrible. No, it doesn't have to be anything like that. It doesn't have to be that adversarial. It's just that you don't want to hand over power to anyone. Why would you? I mean, I certainly wouldn't want to. I would like to have Canada have a very strong say in the future of energy, as it can and should. With all of its gift of natural resources. You don't want to just hand that over to someone, and I certainly don't want to hand it over to some communist party. That is of zero interest to me. And that doesn't mean that one's perfect and whatnot. There's faults in every other system and everything else, except, I certainly know there's ones that are worse than others. Let's just put it that way. So it's interesting to see this kind of the subsidy idea. And of course, you get all the political points of view of, oh, that's terrible government studying. But they've done it all sorts of times. They've given subsidies, certainly for Tesla, and any kind of green movement. And whether or not you originally hated it because Tesla was more of a leftist story, and now you hate it because it's more of a right wing because he's for free speech. That just speaks to being motivated by the ideology and the narrative that's being pushed today. You've seen subsidies also go towards oil and gas, all sorts of sectors. So there, I've tried to play devil's advocate. Is it, yes, you would want markets to be the ones to really be that price discovery and to give the answer and let you know this is the response that the markets want. But at the same time, we're in very interesting dynamics in the world. And the fact that even if you don't agree with the narrative of a transition or and its green kind of storyline, you should be interested simply on the fact that China is so far ahead with renewables, like so far ahead, that should be concerning, because you want to be able to compete on all sorts of platforms with another country. And if they have if they don't have to rely on you for anything, for oil and gas, for anything else, that's once again a very lopsided arrangement and trade partnership moving forward. So for me, if you look at this pragmatically, whether you believe that in the transition for a climate narrative, or you believe in it from a strategic political narrative, it's a different story for ultimately the end use being a stronger West, and of course the argument being, well, how much does it cost to get there? And yeah, I get it. There's been a lot of money spent, and not a lot to show yet so far, and that brings up bigger questions in regards to, if you're not able to convince BlackRock, the trillions of dollars out there, to put money into these projects, how serious is this issue? They support it, but at the same time, how much do they support it? And money talks. I mean, that's the thing. Is if this was the end of the world, there's going to be floods everywhere. The landmass is going to be gone. There's going to be this. There's going to be that. Complete global meltdown. You wouldn't have any hard time at all, getting funds and getting money into anything. So we have to find some sort of truth in between both sides of the politics of this to meet somewhere in the middle and get people on board and excited. And we're not there yet. We're not. And unfortunately, there's too many social ideological points of view that are thrown into the mix, and that doesn't help at all. So the other thing I want to talk to about price controls is we've heard it a lot about here in Canada too. Is that it's from a leftist perspective is that it's greedy corporations. It's all these greedy corporations trying to make all this money, and that is sometimes true. It's sometimes not. Once again, the answer is in the nuance. Like in the States, there is a quote. There's a stat here. It says that grocery stores typically have extremely low profit margins on the order of 2% or less. Now, if that's true, now someone might argue quickly, Andrew, that's not true. That was a stat we got off of now it was a right-wing leaning kind of website. But if that's true, then that would be very tight margins, and you wouldn't fault anyone for that. But whenever you talk about price controls, my first question would be, and you're say a leftist ideology, is the first place you should start with is at home, is the government. Spending trillions of dollars and not having a return on that, a return on investment, that's your first biggest issue. If you're spending like crazy, which we've seen in the West, and that would be both governments in the U.S., as well. Of course, Biden had spent more, but the Trump administration spent a lot as well. So I'm trying to be as fair on both sides. If you spend like that, where is the actual growth? Well, yeah, I mean, spending by the government. If you print the money, so the Fed prints the money for you, gives it to the government, and they spend it, yeah, that increases GDP. But what did you actually get out of that? And that's the biggest question, is what was actually attained. And we're seeing very mixed results from that, which is, once again, why my kind of thesis is, regardless of what happens in the next few months, with all the events that are coming up, but I can't say the word because YouTube doesn't like it, but with this fight for power, I don't see, and there might be volatility short term, I don't see long term there being any shift in mining, for example. Both sides, as we talked about last week, are for mining. They may not be for the entire package of what's in the infrastructure bill. They may disagree on more money should go to nuclear rather than to wind and solar. But those are, once again, nuances that most people really shouldn't be that upset about. Is the argument that we should continue fracking and to sell that to developing nations that are doing it anyway, and use that money to fund green initiatives? I would say yes. Why would we want to shoot ourselves in the foot right now when we could be still using gas, which is cleaner than coal, certainly, sell it to coal-using nations, and take those funds to help grow out a lot of these big initiatives and policies here in the West? To me, that makes sense. That would be the smartest thing to do, is if your goal was you wanted there to be success in the West and in your own countries. But with that too, that maybe explains too why we're seeing such a push on precious metals, is that people are looking at all these fundamentals, and they're saying, do we have a strong foundation right now? Do we feel like whoever wins this, in the next couple months, is everything going to be perfect and stable and fine? No, I don't think so on either side. There's so much work that has to be done. And my hope is that the narrative finds itself in the middle, and then we can kind of disagree on the things we disagree on. But if it's foundational and economic and creating the best opportunities for those that are the best and the brightest, and give them the big dream that they always hoped for when they come to a country, that's the best solution that we could possibly have. Now, I want to jump into another thing here because I'm kind of all over the map, but it ties together. Is that we talked about copper last week, and we had on a thought from Goldman Sachs. Well, let's just play a quick little video here about their quick change in tune.
If you think about Goldman's call here after years of bullishness, how drastic is it and how global is it in nature, given that the demand issues are really spurring from China, but impacting really now companies around the world?
They, I think, are just pointing out the obvious. A lot of copper traders have figured out a little while ago. And I think copper is just following what you're seeing happening in China. The data this weekend was horrible, but it's been the trend. The question is what stops that trend. PMIs are weaker. The housing market's a problem. Every day I type on the Bloomberg terminal BI China and NI China. It kicks into my macro theme that China is just a rapidly advancing emerging market that's reverting. And copper's right in there. So you mentioned copper.
Okay, we'll stop there because it goes on and it's interesting, but this, once again, it ties into that idea. Are you a trader or are you an investor? So if you're an investor, whether the copper is at 4,000 today or whether it's 5,000 that Goldman wants to see it, isn't as relative. It's not that important if you're an investor long-term. We know how long it takes to get a mine open. So you have to be thinking very far in the future. We also know that the demand for copper is just astronomical. If there's any attempt, if there's 10% attempt, a 15 or 20% attempt at doing this energy transition, the amount of copper needed is staggering. So whether there's a slowdown right now temporarily, okay, yeah, the price of copper goes down. But the price of copper has done very well long-term, and it's likely going to do very well. The reason why Goldman would come out and change their tune a bit, well, why would you tell you on your trade? Just an investment bank, especially at that size, stating that this is what we're doing, this is our big love. You're going to have, because it's a competition, you're going to have other investment banks and other trading partners really wanted to go at them and just attack them, just because that's what they do. It's a zero-sum game for traders, and you need that volatility and that market in there. So that's my kind of thought. Let me know what you think when you see that. Because once again, that's a very big distinction between what's the value today if you're a trader compared to what's the long-term macro as an investor into something. And for us, we like to look at both, but the trading is less interest to me than it is the larger macro picture, because to me, that's where the bigger gains are made. And I liken this to a conversation I had with a friend who said, well, Andrew, why are you looking at this nickel project? Nickel is just kind of, it's one of the worst hitting ones right now, or even lithium. Oh my God, it's gone through hell. And I said, well, to me, because we're not going to use it. It's in a down cycle right now and it's looking rough, but I'm kind of the Rick Rule school of belief that if there's something is hated, but still desperately needed, that's probably a great time to look at it. And also because we focus a lot on exploration and trying to find the next deposits that are going to feed up and to create this supply. They're not in production for years. So today's price is although relevant because you can put a model price together today, isn't really terribly relevant because it's not producing. And that's, to me, is why some of these excellent projects that have hit a lot of high criteria are looking quite outstanding, because that large term factor and picture, it's not wrong. They're going to do a transition. It's going to happen. Does it get pushed back by 6 months or a year? Well, maybe. But both parties want it. And it's just they want it in different ways. And whether they want it in different ways, to me, is not terribly relevant. They both understand critical metals. They both want critical metals. They're both looking for it. So to me, that's a great sign. And the rest is just nuance that, yeah, we can fight about, but it's, who cares? They're not fundamental, issues that we have to be concerned about. Anyways, I can rant and rant and rant, but I want to just finish it off with a bit of a tip of the hat to Frank Holmes, U.S. Global Investors. He put out a great piece, as usual. He often does, saying, hey, gold 3,000 mid 2025. We're talking about the assumption now that the Fed's going to be cutting and at what rate they're going to be cutting, what that could look like. It's reminding us that that UBS, Citigroup, Goldman Sachs, Bank of America all see, big gold numbers, 2,700 up to 3,000. These are great long-term, numbers for gold. And we're not even talking about the real gold bug sites, which have much, much higher, and their models can justify a much higher price as well. So I would urge you to go take a look at his site. I always like to give a nod to those that have great information on. He also touches base on what happens a year after when the Fed eases and goes into that quantitative easing, what the S&P looks like 12 months after. And that's an interesting one as well. So we could be looking at a bit of a slowdown right now, and we see that happening. We see certainly China slowing down. But does that mean it's doom and gloom? I don't think so, or certainly not from Frank Holmes' perspective. So something to take a look at, something to ponder. We always like to, be realistic as to where we are right today. Cut through between both sides of very dramatic opposing views and hyperbole to kind of bring it back to the middle and go, we are facing challenging times. It is tough. There's definitely a place for gold and certainly for silver for people. And, we also want to make sure we're reaching out to people that haven't heard this before, not just people in mining or that know that all of these critical metals come from mining, but to new people. So they get excited and they think, you know what? Maybe there is a place for gold. Maybe there is a place for silver in my portfolio. Anyways, we really appreciate you guys sending us emails, doing the polls and reaching out to us. It's a lot of fun. And that's what we want to do here too, is just have conversations, have a bit of fun, chat about the commodities themselves, the metals themselves, not necessarily specific companies. We do that on another kind of platform, but this is to talk more about the entire macro, the energy transition, what that's going to look like, and get some take from you. So thanks for joining us today. September is going to be interesting. We look forward to talking to you on Friday.